Hello, everybody, and welcome to another edition of Bleeding Crypto's Market Update, brought to you by MEX Global, one of my favorite exchanges as of late. I've been using them for pretty much all my scalping that I do during the day, and I've been very happy with their fees and their volume and their platform, really. Very easy to use. I like their mobile platform as well. So if you're interested and you're looking for an exchange that you want to use, or just to at least to diversify, the link is in the description below. So give them a shot. A lot happening, a lot going on right now in the market. We've had a pretty wild ride today. So it was interesting that this ride took place because this morning I was doing my daily, I call it the morning briefs. It's a daily call that I do every morning for my Discord team. And I basically break down Bitcoin of what my thoughts are, what I'm looking at. And I was just talking about the price action prior, obviously, to this candle here. And I was telling them, look, you know what? This, with all this bearishness going on and this slow bleed, this is a very, very typical scenario that we see time and time again. If they're going to bring it down, they're going to bring it down. But when they do this slow bleed, and then you start looking at the technicals and you start seeing this descending wedge pattern, this 9 out of 10 times is going to break to the upside. I mean, it's just one of those patterns that you recognize right off the bat. And sure enough, a few hours later, we get the really beautiful push. We start getting a little green candle. I think that's when I posted it first on Twitter. But prior to that, I did my morning brief pretty much on this map, on this chart that you see right here in front of us. It was just, something to map out, something to look at. We weren't paying too much attention. I didn't really break it down too much, just because it was one of those things that, it looks like it's going to happen. It's broken like this out before. Sentiment is so bearish. And that was another thing that I was talking about, that typically when everyone is talking about lower targets, that's when we drop. And I showed data on HyBlock on how when that happens, people will start positioning themselves for that drop. And I showed the heat increasing and increasing these past few days. It was getting stronger and stronger as more and more bearishness was creeping in through Twitter, creeping in through the market. And people start positioning themselves for that downside move, thinking they're going to outsmart the market. And here we go. The market comes and reminds everybody who is boss. So the big question is, how high are we going? And where do we go from here? So let's take a look at some technicals. Let me do this. I am going to let me use a different chart. I'd rather use a clean chart just because I have a lot of stuff on here that I've already mapped out that I want to keep. So let's do a new layout. And let's do this. For right now, we're just going to erase. Actually, we're going to go to, we're going to use Bitcoin, USD. We'll use Coinbase. There we go. I haven't used Coinbase in a while. I haven't charted Coinbase in a while. Let's do that. And let's just hide volume just for the time being, just so that we can at least, get a little bit more real estate on the screen and not worry about too much clutter. All right, so let's do this. Let's look at this overall move here, and let's start mapping out some trend lines and just kind of get a little, little context. Let's see here. You know what? I don't like this one too much. Let's do something like this. Yeah, that looks nice and respectable. Good touches here, flipped right there. Nice confirmation in here. Basically what I'm looking for is when I look at a trend line, I look for the touches on top, but also for confirmation, I like the underside touches to tell me that this was a pretty good area of not only support, but resistance. And I'm putting this here because I want to kind of show some context on how we were climbing. We had a deviation. We basically back tested this bear break. And then on the next candle, we were able to break above it. This is the daily time frame, by the way. And then we fell below it. And a few days later, we were able to climb back. We back tested this. And then, as you can see, we consolidated in this area here before breaking out. Breakout wasn't that convincing. a little lackluster. And I think a lot of that has to do with, like I mentioned in the last video, not enough pullback to give us to that next thrust that would have been nice and I was hoping to get, but we didn't get because it just wasn't enough of that steam building up, that rubber band effect. So what happened? We came back to the trend line, we lost it, and we actually haven't back tested it yet. Okay, all right. Well, we lost it. We haven't back. So that's one point there. So let's kind of look at that. We have a back test that we haven't back tested back here at. We'll kind of keep a mental note of it. All right, 30,000. We'll see if anything else we can find confluence with anything else. So now let me do this. Let me go to my trusty 12-hour time frame, and let's take a look at this. We had a high here of what was this? You know what? Let me put a ray here. Boom, right, had a 31.50 here on the Coinbase chart. Then we had a low here. Then we had a lower high. Then we put in a lower low. So let's do this. Let me get my fib, and let's measure what this lower high did. I want to get an idea of. Okay, so that's there. Let me put my lower high rule. Okay, so there we go. Let me open this up a little bit more here. Okay, there we go. And basically what I'm doing here is I'm trying to establish on this move up here after we lost this high and we came down, we put this low. When we pushed up here, I like taking out my lower high rule, and these are the three areas that I look for when I look at a lower high. I look at the 618, that's why it's in green. It's the most typical fib for a lower high touch when I'm looking for lower high, and then obviously after that proceeds a lower low. Sometimes you see the 706. Rarely the 786 forms that lower high. That's usually a little too high, but nevertheless I have seen it more times, enough times, better said, for me to put this in my lower high rule. So I kind of mark it kind of the same way: green often, yellow for sometimes, and red for hardly. So that's kind of where that coloration goes. I think actually that looks like some sort of some flag. I think it's some I don't know, some African flag. It looks like it. Oh, anyhow, I'm getting off topic here. All right, so we put in a nice lower high here at 706. All right, great. So now let's do this. We've established that lower high there. Let's put in a continuation rule for here, and the top of that is right there. Okay, perfect. So we've got, all right, so here we start looking at some areas of targets for the upside. So I'm going to keep this, not trying to influence a bias that we are going to continue down or that we're going to continue up. We're strictly going to look at the technicals. Now, I'm assuming right now, for the sake of this analysis, that since we already put a lower high in, we confirmed it, and we put in a lower low, it's only reasonable to think that, well, if she goes up and does the same thing and repeats that pattern, where will that lower high be? Now, we'll also look at the bullish case. This is more of the, I don't want to say bear case, because this is just a continuation of this downtrend here. We obviously had an uptrend, so that's what we established when we started the video. So we established an uptrend, we had a deviation here, and we just had another deviation here. But now we put in a lower high and we put in a lower low. So with that in mind, I'm going to continue that thesis as if we're going to continue down. Then we will make a case for continuation to the upside. But for now, let's go ahead and continue here. So now that we've established that this may be an area, looking at how we stopped here at 706, I'm going to assume, again, we're going to stop somewhere inside of here. But typically when I've noticed that when we're in a downtrend and we put in lower high rules, and every coin's different, when it puts in a lower high off of a certain fib, it tends to repeat that. It tends to repeat 706, or if it's 618, it'll tend to repeat 618 and so forth and so on. So for right now, we're going to use this 706 as a target. I need to find some confluence. What is some confluence on that 706? Okay, so let's do this. Let's look for, let me do this here. Let me get my extended line. Let me go from here, and let me go from here. Okay, we got 1 touch, 2 touch, 3 touch. Okay, perfect. So now that I have established an area of resistance. Let me go to lower time frames. I just want to see some good respectful touches. So we got that high. Nice touches. Perfect. Okay, great. That's what I wanted to see there. We'll keep it on the 4 hour. Let's see here. So we will go ahead, and now we have established an area of resistance as we're coming down. We're trying to come up. So here, obviously, we try to regain that bullish momentum, try to regain that 3150. We were unable to. We hit this wall, hit it again, and then finally we broke down and we started that downtrend and we put in a lower low here. Now, measuring that line, look at that. You see how things work out? Again, not having a bias, just following the price action, following the TA. Now, look at the way things start to develop. The trend line that was resistant, that began here, that started here and was confirmed here as resistance, is now lining up with the 706 lower high rule that we had here. Again, guys, don't be upset. I'm not telling you that this is the end of the move. We're going to go higher. I know there's a lot of people that are thinking we're going to go to 32,000. Me personally, I would like to see 48,800, which is that 618 undertouch that I talked about in the last video. So you guys know where I stand on that. But again, I can't ignore the technical. So I'm going to continue this as if this is going to be well, not if it's going to be, but this is a possibility of what we can see. So here we go as far as 706. So now this tells me that if we follow this rule and if we follow the same pattern, 706 here, which is what 29,459, is a very possible resistance point here. Doesn't mean that we can't flip it and continue. But for now, this is the target. We need to take it step by step. We need to make sure we come up with an area that we can find some confluence, that we could make a good case for, and then work our analysis around that. Once we get there, obviously data is going to come in. More data, more information, better thesis that we can have moving forward. A lot can happen here and a lot can happen here. But everything from here to here and from here to here is a guess because the data hasn't filled in yet. We have to wait for that data to fill in. So I hope you understand where I'm coming from. Okay, now, so does this mean that we're going to go straight there? Unlikely. Why do I say that? Well, look left, guys. Look left. Look at this. When we go up, guys, just look. What comes to mind? Let me actually go to the 12-hour time frame just to clean it up. What comes to mind when we're climbing, guys? What comes to mind? Yeah, a little stair step, right? Stair step, stair step, stair step. It's not just one straight candle. This is not a bull market. It's a bullish market, but we still haven't confirmed a bull run. Remember that. We're in a bullish market, but we haven't established a bull run, meaning that we hit 31,000 last week. We're at 29,000. How can you not call this bullish? Obviously it's bullish, but it's not the bull run. Anything below 618, I told you guys this the last video that I made, anything below 618 is still in a bear market. We break 618, then we are talking. So if you guys haven't seen that last video that I made, I encourage you to go to my YouTube channel where you got this one and look for the last video that I did a few days ago. Okay, so let's go ahead and move forward. Now let's break it down. Let's go now into the lower time frames, and let's see what is going on in these lower time frames. I think I can use the 4. Let's use the hourly. Okay, let's see what's going on with the hourly first. All right, hourly, you can see here we put a high here, and then we came up and we swept it with this wick here. We were unable to close above this wick here. Put in another push to the upside, still was smacked down. Tried it again and we put in an ugly candle. However, this candle here, just to give you some context, this candle here was a liquidation event. There was a massive order put in on Bybit. It was a massive short put in here, and they came and they just popped it out. He just took it. It was a pretty big order. So I know that from following the on-chain data that's what this was. If not, this more than likely would have ended up in another wick. But that's what this was about here. And now it looks like that we tried it again and we still are finding resistance. So I'm going to assume by looking at this price action and looking at this resistance after seeing such an incredible upthrust that we're starting to get a little bit heavy, and it's natural. We're not going to just go straight up in a single line like everyone wants to. We're going to stair step our way down. Now, what do we do when we stair step our way down? We look for, I like to put what I call a continuation rule. I got rules for my fibs for, lower high rules, continuation, reload, all kinds of stuff. So let's take a look at a continuation fib and what that would look like. Actually, it would be from this thrust here. This thrust here, continuation rule. Okay, continuation rule. There's two ways that this can play out, in my opinion, as far as continuing to the upside. One, obviously there's three. Yeah, we can continue to break down and go lower. Yes, I know that, but I'm just saying for the sake of continuing to the upside, continuing my thesis to the upside. There's two things I'm looking at. First, I put my continuation rule. That has to be invalidated for me to go to my next rule. So my continuation rule says that for us to we put a bull flag here. I don't want the bull flag to break the 50% line. Typically, a bull flag will come here to my 3.82, bounce, and then we use a harmonic to find a target. So let's just speculate a little bit. Let's go into my trend line. Let's go into here. Let's go into here. Let's clone this, clone that. Okay, so let's do this. We get a flag. We get a nice flag. Perfect world, 382. Do we have some confluence? Look at that. There's that. Remember that 706 lower high? There's that resistance line. There's that continuation. There's a harmonic pattern from the 382. Do you see, guys, how little by little things start to develop? It doesn't matter if you're a bull or a bear. Price action is a price action. The technicals are the technicals. They're gonna tell you what the most probable scenario is, whether you want to hear it or not. And when you start finding confluence, it starts to line up, you can start to develop, hopefully, a better respect and understanding for where price may go, whether you like it or not. So let's go ahead and all right. So that's a possibility there. Now, I said there was two possibilities, right? The second one would be a slower continuation to the upside. So what I mean by that is, if we break the 50% rule, does that mean that we're going back down to new lows, to the new swing low? No. It just means that we may, because we had such an upthrust, we may need to cool down a little bit, and that's okay. And that's perfectly fine. I then bring out my reload area. My reload zone area here, what this tells me is if we come down into here, this is going to be more of a consolidation, catch your breath type of move before continuing upside. Now, I made an example of this on my last video. I think it was on XRP. Remember when I showed you guys this? The reload zone? What did we do? We came down here, we bounced, we came down, we put a double bottom, and then that gave us that move to the upside. We broke through the continuation rule. It was look at this upthrust. See this upthrust on XRP? Well, that upthrust did not leave a lot of room here, any base for support. So it came crashing back down, and it took a little bit more time to get the next bid. Same thing I'm looking for here. I'm looking for, if we cannot hold that continuation, my continuation rule, then we come down in here, and we're probably going to hang out here a little bit longer. Remember, guys, the market is not in a hurry. Only you are. We can easily come down here, 618, 706, 786. It's almost the same, not almost, it is exactly the same fibs in reverse to the lower high rule. Those are fibs that just play out often, more often than not. Now the 706, just to be clear, is not part of the Fibonacci sequence. Okay, it's a level that I use that was given to me by another trader that I respect very much, that helped me through my journey of learning to trade. His name is Chingus X, and he introduced me to this level 706, and I've been using it for years, and it's very accurate, like using it. So if you guys want to give it a try and put it in your fib sequence, see what you think. Let me know. Give me some feedback. Okay, so if we come back down into here, look at this. Look at this. Let's snap a line here. Just 618. Just on the Fibonacci, on the golden pocket. Give me 1 second. Let me. There we go. And I'm just gonna put this green, and you'll understand what I'm saying. Remember what I told you about finding confluence? 618. Look at that. What does that look like, guys? What does that look like? What do we look for when we have an upthrust and we're coming down and we're looking for support? Do we look at this for support? This bottom here for support? No. We look at prior resistance. Prior resistance is always going to be the first level of support on the way down from breaking that resistance. It's not going to be the support below the resistance that you broke out of. It's going to be the top of that resistance that now flips to your support. And look how well it lines up to 618. So we've got confluence with prior resistance into new support. Fibonacci, great Fibonacci golden pocket area if the 382 and 0.50 doesn't hold. And obviously, guys, same rule applies with the harmonics. So if we are going to, you know what? Let me get rid of this. If we are going to go there, it's going to be probably a slower journey to that upside. There we go. If we go there, we are going to have come a little bit short of that 706 fib for that lower high, if that's the route it's going to take. If we go down to the 618, which means we're probably going to see a little bit of a pullback correction, and then surely, slowly but surely, find our way into these crossroads, into that diagonal resistance line, into the 706 lower high rule. So just something to think, something to keep in mind. Let me go ahead and just erase this, erase that, and erase this. So for the time being, just to recap, we're looking for one of two things. I'm actually going to put both of them on here. I want to put both of them on here. And this one, continuation rule. There we go. Okay, so we have here one of two. Continuation or reload. One of the two. Once these hit, we now have what? We now have data coming in. We now can start looking forward. We can speculate, like I just did, here to here, here to here, or here to here. But until we have that data actually in hand and here on the charts, we really can't continue too much ahead, because at that point you're speculating too much in advance, and I really don't like doing that, because you can come up with 1,000 scenarios. I can come up with 100 scenarios. You can come up with 100 scenarios, but it doesn't really hold any weight. I like taking it as it comes in, as the data comes in. I may have to tweak what I thought. We may come down all the way to 786. It might consolidate a little bit longer, or sometimes the 382 gets front run and 236 hits it. If 236 hits it, guess what happens, guys? You run out of steam much quicker. So what happens when you have a 236, then you only have a move of about 1.27, or very rarely you get a 1.445 on the fib extension, but typically you get a 1.27, 1.27 on the fib extension. Here, let me show you what I'm talking about. Main extension with fibs right here. So what will happen a lot of times, if we get front run on 236, we come down into here, we'll run right into here, which is short of a harmonic pattern. Harmonic patterns typically work better when you get that pullback that the market needs. You have to understand, guys, it's not about being bearish. These pullbacks allow the price to move higher. The shallower the pullback, the shallower the upthrust is going to be. So I don't want to see a 272. I want to see this resistance line get tagged. I want to see what kind of behavior we're going to see on this line. The way we saw, are we going to see what we saw back here? Is this going to happen? Are we going to try once? Are we going to try again? Are we going to try a third time and then fail? Or are we going to flip this and go to 32,000 like a lot of people think, or to 34,000, or to 36,000, or to my $48,000 target? We don't know. There's a lot that has to happen. There's a lot of points that need to happen before we can start talking about 32 and 34 and 48. We got to take it step by step. And that is unfortunately, well, not, I don't want to say unfortunate, but that is just the way traders have to analyze the markets. They got to analyze the data in front of them. They could go a little bit, speculate a little bit like we did to the upside as far as a couple of targets. But more than that, it's kind of just really fluff, to be honest with you. It's a big waste of time because you're getting too ahead of yourself. How do you speculate on a higher price when you don't have the sufficient data in here to tell you how this is behaving? This can stop right here and go all the way back down, and that's it. Nothing. So we just got to give it some time, and let's wait and see what the data shows us. I'm going to show you guys something here on the heat map. Okay, so here's something interesting on the heat map. Remember these walls, these sell walls that they were putting in here at 29? A couple days ago, 2 days ago, a couple days ago, they removed them. Look, it was all of this big cluster. They removed it. They opened the door. Now this, what I'm telling you here, actually speaks to all you bullers out there. Everybody who has a bias for the bull, here, this is for you. And again, I'm not going to say it out of what I feel. I'm just giving you the data, and you can interpret it however you want to interpret it. But I interpret this data bullish, and I'll explain why. We have basically a clear road ahead of us, no roadblocks. First roadblock is at 30,400. Second roadblock, 31,000, 31,500, and 32. You see that? They opened the door. That tells me that they're not trying to hold it down. So if the buyers step in, if they come to the plate, better said, they have free range. Now, it doesn't mean that they're going to do it, but this helps the bulls achieve a higher target if the bulls have it in them. And obviously, we don't know that until we fill it in. Now, another thing that's bullish is this at the bottom. They have right here a couple of days ago, actually a day ago, yesterday, a day after they removed this roadblock, you know what they came and did? They said, just in case the bears get a little too carried away, we're going to step in and we're going to hold this price here at 25,450 and 25,425. Massive support wall. Massive support wall here. So again, that to me leans bullish. That to me says that, you know what, they don't want it to go that much lower. They're really stepping in. This $25,000 support wall has been here for a while. It intensified the same time they removed this roadblock. When they removed this roadblock, they actually intensified it, and you can tell by the coloration here. The brighter, the yellower it is, the more intense, meaning the orders are heavier. So right at the same time that they took that off, we got really heavy support. And then yesterday they said, we're not taking any chances. We're stepping in $500, $450 higher, and we're going to put that support there. We're going to put that cushion there just to make sure. And they've actually, they put some, not as intense, but they put some good support walls at 26,000 and at 26,500. And in case, and look, and they just put one in just today, just a little while ago. This is a 4-hour time frame. So literally the last 4-hour candle, they came in and stepped in at 27,500. So that tells you right there that there's a lot of people stepping up to the plate at 27,500. So let's take a look at our map now. 27,500. Where is that line up here? 706. I tell you guys, I'm not making up this number. I didn't rehearse any of this shit. Look at this, 27,500. I'm gonna put it here on my map. I'm going to put it right here. Actually, no, I'm sorry. It lines up better with the 706. It's $20 above 706. So think of the mindset real quick. Just humor me for a second. Again, I'm fascinated by technical analysis. I don't think any of this happens by coincidence. I think everything's planned. And when you come to understand the Fibonacci and you understand the miracle, I call it a miracle because when you think of the millions of people around the world that are trading an asset 24 hours a day, and then to put a line on your chart, lines, better said, the Fibonacci sequence on any given time frame, and watch how well it gets respected. It's hard not to be at all with technical analysis, to be honest with you. And the reason I say that is because look at this wall here, guys. Tell me the market makers, the whales who are supporting price, are not paying attention to the Fibonacci. Look how well it lines up with 786. And this is part of the Fibonacci sequence, the 786. Look how well it lines up there. And look how well it lines up to prior support. Not the new support that we're trying to confirm, but prior support that was what? Prior resistance. You see the resistance here? The support came back up here and became resistance until we did what? We broke, back tested. Look at that beautiful back test on that. And then off she went. Don't you love technical analysis? Once it broke, it went to the next area of resistance. It came up there. It tried it. It couldn't muster up the energy. Came back tested it perfectly to confirm it, and said, "We're out of here." And that's just fucking phenomenal. All right, guys. So hopefully this was able to help you guys think of what to expect in the near term, some of the possibilities, some of the areas where the whales want to step in and support the price action. And if we go lower, we already know where those areas are at. But I'm not thinking lower right now. When will I think lower? If we come back down to here. If we come back down to here and we blow through this and we're right below resistance again, then to me that shows a lack of follow through. That shows a much weakening market structure, as we didn't even go up and make another lower high. We went way below. As a matter of fact, you know what? Let me see something here. I want to check something real quick. Let's see here. Now let me do it on here. Let me take off this so I can remove the noise. I wanted to remove that. I'll remove this. Hopefully you guys already took a snapshot of that. I want to see if this lines up with any fib. See here, no extension. Oh shit, perfect. Look at that, beautiful. Oh, okay, well, beautiful and yes and no. Here, and let me explain to you why. Again, I'm not trying to influence a bias one way or another. I'm just simply putting the technicals on. Here's my continuation rule. Remember what the continuation rule was? Okay, look at this. If you guys want to respect the continuation rule here, for it to go here to 382 and then bounce, and you guys love it then, well, guess what, guys? You got to love it here too. You can't just pick and choose when you're going to like something and when you're not going to like something, because it does not fit your bias. What I'm trying to say is that when you take this entire move, we just checked 382. So we got to watch this. So this here now is going to be an error. Now I'm focused on this here. I wasn't as focused on this. I was more focused on this on that trend line with the yellow 706. To be honest with you, now I'm focused on here, because this tells me that what if this is a continuation to the downside, and we're not even putting in a lower high. That's another possibility. Guys, I'm not here to tell you which way it's going to go. I'm here to tell you what the technicals are going to do. I don't know which way it's going to go. I'm not smart enough for that. I'm barely smart enough to throw some lines on here and look at some technicals and try to and allow the market to point in the right direction. That's all I can do. Meaning, if we can't break through here and we come back down in here, what does that tell you? My continuation rule is what? Continuing to the downside. If we break through here and we get up to this and we break through here, then the chances are we're going to hit the lower high rule next. Now, that doesn't mean that it's going to hit the lower high and then go down. Again, guys, we have to use a process of elimination, invalidations. Right now, I just saw this, so now this becomes the first aerial invalidation. You have to invalidate 382. You have to invalidate 0.50 for any continuation to the downside. If you can't invalidate this, chances are we're going to go down. Okay, invalidate. Boom, we invalidate it. Now, the next one, 706 or 618 for the lower high rule. So, if we hit that and we reject and we come down, then that was valid. And we're looking for what? Another lower low. It is what it is. Now, we invalidate that, and now we're talking about higher targets. You know what I want to do? One more thing I want to check out before I end the stream. I want to look at. Let me look at this channel that we were in. We were in this. Prior to that, we were here. This was the low. Yep, right here. Let's see. Oh, we hit that too. So I'm looking. Remember the channel? We were here for like almost a month. This is a three week channel. These wicks were all deviations. This was a deviation to the downside. But look, if this lines up, as a matter of fact, I'm going to do this just to show you right there. This was a zone. This was a channel in itself. But when we broke through that channel, we then confirmed the top of that. We had a deviation here to sweep these stops, just like we had deviations here. And look where we just landed, at the bottom of that. The bottom of that. I mean, that's even closer than the 382. Shit, yeah, actually, it's right in between. So, again, guys, this is all about using the tools that we have to try to come up with areas of confluence. Now we just have another area of confluence, another tool that I use for confluence to show me that now we're hitting the bottom side of the channel that we broke into, we broke out of, and now we're back testing that break. Because look, if you look here, when we broke, we never came back and back tested that. And now we're hitting 382, which is a continuation rule, and we could see more downside. You got to remove your bias, guys. You got to remove your bias. I mean, there's too much confluence here for you to ignore. I'm not being a bear. I'm just telling you what I'm seeing. And I just talked to you a minute ago about invalidations. Let's see. Can we climb back in here? Step number one, break 382. Okay, great. Now we're going to 0.50. Can we invalidate 0.50? Great. Then we go into this here. You know what I want to see? If we line up that medium, the medium of the channel to the lower high. Let's see. Let me see. Yeah, there it is. Okay. Shit. I'm telling you guys, like being in the Matrix, everything fucking lines up. Medium of the channel lines up with 706. So there's our next invalidation point. Can we break out of this downtrend pattern that we've established with this high, with this low, this lower high, this lower low? Can we break out of this? Can we invalidate this? We need to invalidate this, and we need to invalidate this. We need to reclaim this trend line, get out of this trend line, better said, invalidate this trend line. Then we have to invalidate this. So as you can see, the bulls have a lot of work in front of them. It's not going to be easy, but it can be done. But unless you have the type of money and capital to push this up here, you have to go with the flow. You have to go level by level and allow the invalidations to happen, because you're in no position to dictate which way the market's going to go unless you're a market maker. All we can do is follow the rules, wait for those rules to break, and then continue with not formulating a plan, but to twerk. No, that's not the word. It's not called twerk. Tweak. I got twerking on my mind. We have to tweak our thesis around each invalidation so that we can now set up for the next invalidation and the next one. And that is what a true analyst is going to do. He's going to remove his bias and he's going to create a plan to help him analyze the market level by level as it goes so that he can have a more grounded view of where we're going. Because think about this, we break and we invalidate this 382. We reclaim this channel. We invalidate this. Tell me that you are not, I mean, personally, myself, $48,000 is still on the table. I mean, it becomes much more clear to me that that's the route we're going. Obviously, between invalidating this and 48,000, there is a lot of work to be done. But this is a major, major milestone if we can invalidate all of this and get back up above 31,050. That's a lot of work. Because remember, even before I can think about 48,000, I still got to get above this. I got to reclaim this. And not just a wick. I got to find acceptance in here. I got to trade in here. And I got to start moving up higher. I can't just trade here and come back down and then find resistance again. That's not invalidating it. Invalidating means you come, you hold it, and you start trading higher. Then I can start back to my macro view of $48,000. All right, guys. Hope this video was helpful, and I'll keep you guys updated. And I will I'll probably update this video in a few days from now. I think that would be a good lesson. I'm going to try to leave this chart on my computer here, so we can just leave off from here. You know what? I should have left my other stuff on there, so we can see what we've done. You know what? Let me do that. I'm going to just put the reload zone on here, and we had this other lower high. I don't want to. We already saw this lower high, so I don't have to put that lower high because that doesn't pertain to the current price action. We were just establishing that this was a lower high, and we were looking at what level Bitcoin found for the lower high, which is a 706. So we don't need to put that on there. This is what we're focused on right now. We're focused on whether we go to 382, whether we go to the reload zone. As a matter of fact, let's do that. Let's put our continuation. Okay, there we go. So we put our continuation rule. You know what? This is what I did wrong on here. I know something felt off here. This is too low because this was the thrust right here, not this. This was more of a liquidity sweep. This wasn't really. I'm not using this as my low for this because we put in this low. We came up here. We retraced this on itself. So when you take the bottom of this and the top of this, we didn't continue from here. We actually came down, and then we continue. So just so that we're clear, and this is sometimes I get in, not an argument, but I get into discussions with people that, oh no, you're putting it too high. You got to go from the low. No, I don't, because look. This in itself was a move. This low and this high, and you go here and you put a fib on, a full fib. No, there's no extension. Full fib. What do we do? 618. As a matter of fact, I'm going to do this. Reload zone. Boom. Right there. So why would I use this price action as part of my bottom for my new reload zone? Look, this did a reload zone in itself and confirmed it, and we took off. This was the bottom of that move from swing low, swing high, 618, boom. And this is why I do that. People are always asking me, not asking me, but kind of telling me like, hey, you put it on the wrong spot. No, I did not. And hopefully that makes sense. So if you guys saw me do that, you'll understand why I did it. Let's see here. So this was our reload zone from here, and then let's put our continuation rule. Whoa, what did I do? Hold on, guys. Sorry. Okay, that's that. Okay, now I'm gonna use. I just want to leave the chart the way we had it, so that when I continue the video, there we go. So we're gonna do. We're looking for 382 continuation or the reload zone. So this way, when I do the update in a few days, we've already resolved this. Hopefully we'll resolve this and we'll know. And this will make more sense. This will make a lot more sense in a few days where we ended up. Did we respect my continuation rule? Did we consolidate inside of here? And then we'll look for upside and we'll see how the price action behaved. Everyone have a really good day, and hopefully this video helps you guys. And please hit the like button.